For decades, the United States has maintained strategic reserves of vital resources: oil, gold, even rare earth minerals. But now, in a historic move, the federal government has added a new item to that list: Bitcoin. Yes, you heard that right. The U.S. has officially established a strategic Bitcoin reserve designed to hold seized and acquired digital assets under federal custody, effectively turning crypto into part of the nation's strategic stockpile. It's a monumental shift, one that signals the U.S. government's full acknowledgement that digital assets are no longer fringe or speculative. They're infrastructure, and with that recognition comes power, policy, and strategy. Let's break down what this means for markets, for businesses, and for America's role in the future of digital finance. First, what is the U.S. Strategic Bitcoin Reserve? The Strategic Bitcoin Reserve, or SBR, is a federal initiative that consolidates and manages all Bitcoin and major digital assets seized by the government, typically from criminal cases, tax enforcement, and forfeitures. Previously, those assets were auctioned off, sometimes at shockingly low prices. But that approach is over. Now, instead of selling, the government is holding. That decision alone marks a turning point. Because when a government stops liquidating and starts accumulating, it's no longer just regulating an industry, it's investing in it. The reserve is being administered through the Department of the Treasury, with oversight from the Department of Justice in coordination with the Federal Reserve and the SEC. Its goal is simple: to treat digital assets as part of America's strategic reserve system, alongside gold and other national assets. So why is this happening now? Three big reasons: policy, power, and positioning. First, policy evolution. After years of hesitation, U.S. regulators finally have a clearer legal framework for digital assets. The Financial Innovation Act and updates from the SEC and CFTC have clarified what counts as a commodity, a security, or a payment token. That clarity gives Washington confidence to treat Bitcoin as a legitimate reserve asset. Second, geopolitical power. Nations are realizing that digital assets are strategic tools. China has the digital yuan. El Salvador holds Bitcoin as legal tender. Russia and Iran are exploring crypto for international trade. If digital currencies become part of global finance, the U.S. can't afford to be left behind. Holding Bitcoin ensures the U.S. maintains influence in this new monetary frontier, both as a regulator and a participant. Third, strategic positioning. The U.S. already controls the global dollar system. Adding Bitcoin to its reserve structure strengthens that dominance, not by replacing the dollar, but by extending its reach into digital finance. Think of it as hedging against the future of money. Now let's talk about what this means for markets. When a government as powerful as the United States starts holding Bitcoin, it changes everything. It validates the asset class. It signals to institutional investors that digital assets are here to stay. And it introduces a new dynamic, one where government actions directly affect crypto prices. Just as oil markets respond to movements in the Strategic Petroleum Reserve, Bitcoin markets could now respond to policy decisions about the SBR. If the Treasury decides to buy more Bitcoin during downturns, that could create a price floor. If it sells during volatility, it could stabilize markets. In other words, Bitcoin is becoming part of macroeconomic policy. There's also a security dimension here. By creating its own sovereign wallet infrastructure, the U.S. is investing heavily in custody technology, secure hardware, multi-signature protocols, and zero-trust architectures to store and move digital assets. This is not just about holding Bitcoin safely. It's about developing national expertise in wallet technology, cryptographic systems, cold storage, and quantum-resistant keys. Those same technologies could be used in future central bank digital currency, CBDC systems, military logistics, or even cyber defense. Essentially, by managing its own digital reserve, the government is building a national-grade wallet system, something no private company could replicate at this scale. Let's zoom out. The U.S. government now holds more than 200,000 Bitcoin, worth billions of dollars, from seizures related to Silk Road, Bitfinex hacks, and tax enforcement. In the past, those coins were auctioned off to private investors. Famously, one of the buyers was venture capitalist Tim Draper. But those auctions are now suspended. Instead, the assets will sit in the reserve, potentially growing in value, but more importantly, serving as a digital asset stockpile that can support financial stability, crisis response, or national programs. It's not hard to imagine a future where the strategic Bitcoin reserve becomes part of America's financial playbook, used for liquidity management, debt hedging, or even digital foreign aid. The political message is clear. The US isn't rejecting crypto. It's absorbing it. For years, digital assets were seen as competition to the dollar. Now, Washington is turning them into a strategic complement, integrating them into national policy instead of fighting them from the outside. That's the genius of this move. It neutralizes crypto as a threat while capturing its potential as an asset. It also positions the US as the world's most sophisticated custodian of digital reserves, ahead of allies and rivals alike. But let's not ignore the implications. There are questions about transparency. How much Bitcoin does the US actually hold? Will these reserves be audited? Will the government start acquiring Bitcoin on the open market? Some critics worry this could distort prices or give Washington too much power over decentralized assets. Others argue that it's long overdue, that a 21st century superpower needs 21st century reserves. Either way, it's historic. And here's the broader takeaway. This move blurs the line between public and private money, between state power and digital innovation. It means that from this point forward, the future of crypto isn't just about startups, miners, or exchanges. It's about governments. The US has turned its strategic wallet into a geopolitical instrument, a digital vault that holds both economic value and technological leverage. And that changes the global game. Because in a world where currencies compete for influence, the countries that understand and control digital assets will write the next chapter of financial history. The strategic Bitcoin reserve is America's way of saying, we intend to lead that chapter. The bottom line, the US government now holds Bitcoin not as contraband, but as capital. Not as a threat, but as a tool. And not as an experiment, but as a strategic reserve. The era of national digital wallets has begun, and America's is the first that truly matters.